What's at stake for VCs and for startups? I want to bring in Hemant Taneja. He is a CEO and managing director of the venture capital firm General Catalyst. Roughly 10% of the firm's portfolio companies are experiencing payroll challenges right now due to the collapse of SVB. Good morning to you.
Good morning, Andrew. Thanks for having me.
I'm sure the weekend was tough, but how comfortable or not are you now about the state of affairs and the portfolio companies that are exposed to this bank?
Well, we're very grateful for the Treasury, the Federal Reserve, and FDIC for stepping in. I think backstopping the deposits has gone a long way. The fact that they're going to be available. We were all scrambling, us and many other firms, over the weekend to create some loans from our respective management companies to make sure these companies can make payroll. But I think now that crisis has been averted. I think we've got to still think about other issues, but the companies should be fine from a business continuity standpoint.
And talk about those other issues. I'm curious now. I mean, a lot of venture capital firms advise their portfolio companies, and it wasn't just that the venture firms themselves had money there, but they were telling all their portfolio companies, do business with SVB. Not only was that a mistake, how do you think that things change as a result? Will you only do business with bigger banks? What's going to happen?
Yeah, look, SVB has been an important fixture for the venture capital industry and for the innovation industry. I think they understand how to lend to a company that's very small and is venture-backed. Not having them is a big loss, and we need to figure out how to stabilize, an SVB-like offering in the ecosystem. There are other options available, and our companies are moving, to make sure they diversify. I think the biggest mistake in the industry was we relied on them so much that most companies, when they started, they just opened with SVB, and that was it. And the lesson learned is that we must diversify and make sure there's at least a couple of banks that are supporting these companies from the beginning.
What do you think of the incentive systems that led to this? And one of the things that we were talking about earlier was, a lot of times SVB would offer loans that were unavailable elsewhere. They would offer mortgages personally. I'm not just talking about mortgages for the businesses, but mortgages personally for some of the leaders of these businesses at rates that were much more attractive, in part because they were keeping their business deposits there. In some cases, SVB said that they would give you certain loan rates if you kept all of your money there, as opposed to having even any money elsewhere. Do you think that there should be rules against that?
Look, I think those offerings actually were made it really easy for these companies to do business. It was, I would say, I don't think it needs regulation against it. If there was diversification, this really would have been fine. And I look back in hindsight, I think about how is it that, we were so comfortable with just having, a single option for these companies. I think once we move past diversification, this issue should go away from my standpoint.
You may not like this question, but I want to know about your thoughts on personal responsibility and the idea of bailouts. A lot of people say this is not a bailout because it's true. It's not a bailout of the bank, SVB, similar to what happened in 2008 to those banks, but it's a bailout of the depositors. The depositors oftentimes have been venture capital firms and their portfolio companies, which means their investments. So therefore, they have been bailed out. What do you think of that?
Look, I do come on the side of this is not a bailout. I do think the way this whole thing happened probably could have been avoided, but this was like a classic prisoner's dilemma case. What started happening was when we started hearing the venture community that the bank might be at risk, the obvious advice to give as board members to your companies was, well, it might be a low risk, but take the cash out just to be safe. And in this era, right, that can lead to a bank run really fast. And